Aave crypto price prediction. This could change everything. Aave is trading around $97, with a market capitalization of approximately $1.5 billion, more than 85% below its all-time high of $661. But behind this seemingly quiet price action, Aave's activity is sending a completely different signal. $14.3 billion in Aave TVL and more than $11 billion in active loans, while June 30th recorded 1,806 new wallets on Ethereum, the strongest user growth in nearly 5 years. So, is Aave truly accumulating before a major surge, or is this merely the calm before another crash? The catalyst that could change the entire story is Aave V4, which has launched on Ethereum with a hub-and-spoke architecture designed to unify liquidity, improve capital efficiency, and expand lending markets with separate risk control mechanisms. Notably, V4 underwent approximately 345 days of security reviews with an audit budget of $1.5 million, and no critical vulnerabilities were identified in the published reports. In this video, Crypto Radar will analyze Aave's current position, the catalyst that could reshape the project's value, and realistic price scenarios for 2026 to determine whether Aave is preparing for a major breakout or whether it is simply the final trap before the market reverses. Let's start exploring. Crypto Radar. First of all, Aave today still holds a leading position in the decentralized lending sector, but the gap with rivals is no longer impenetrable. In January 2026, Aave accounted for an average of 62.82% of the active loan market share in the protocol group tracked by Token Terminal. By April, this figure dropped to 58.13%. In other words, Aave still controls more than half of the market, but has lost nearly 5 percentage points of market share in just a few months. This is not a sign that Aave is losing its dominance, but it shows that rivals like Morpho, Fluid, and Spark are forcing the protocol to compete more fiercely on interest rates, capital efficiency, and user experience. What sets Aave apart from the majority of altcoins, however, is that the protocol doesn't just have a story to tell, it is generating real revenue. According to updated data from defi Llama, Aave V3 alone generated around $27.9 million in fees in the last 30 days, of which around $3.52 million was recorded as protocol revenue. If converted to the latest 12-month data, annualized revenue is about $115.3 million. It should be distinguished that the entire fee paid by borrowers does not belong to Aave, because the majority is transferred to liquidity providers. But the retained protocol revenue still shows that Aave is operating like a financial platform with real business operations rather than just subcontracting. Depends on the issuance of tokens or speculative expectations. Another growth layer that is slowly becoming important is GHO, the native stablecoin of the Aave ecosystem. In June 2026, GHO's capitalization reached approximately $547.9 million, up 1.5% from the previous month and up to 128.5% year-on-year. The March report also found that GHO contributed about 10.8% of Aave's revenue, even though its size is still much smaller than the mainstream lending markets. This is significant. Aave is slowly expanding from a place that connects senders and borrowers to an ecosystem with a stable currency, savings class, and revenue source of its own. If GHO continues to be widely used, Aave could generate more cash flow without being entirely dependent on the leveraged borrowing cycle of the crypto market. But if the platform is generating tens of millions of dollars in fees per month, why is the Aave price not yet fully reflecting that power? The answer lies in the value accumulation mechanism. Aave's revenue does not automatically flow directly into the pockets of Aave holders. The use of the cash flow to buy back tokens, replenish reserves, or fund development remains at the discretion of the DAO. From the time the acquisition program started on April 9th, 2025 to the end of February 2026, Aave DAO allocated approximately $42 million to purchase 209,005 Aave, equivalent to more than 1.28% of the total supply of 16 million tokens. This is a significant demand force, but not enough for the market to view buybacks as a fully stable and predictable long-term supply reduction mechanism. And Aave is not the only project existing within a large gap between fundamental strength and how the market values its token. Hedera is also facing a similar situation, as many important signals related to real-world adoption, ecosystem development, and growth potential have still not received the level of attention they deserve from most investors. To better understand that story, you can watch the video Hedera HBAR Price Prediction: What Everyone is Missing on the Crypto Radar channel after finishing this video. But returning to Aave, the data we have just analyzed only shows that the protocol possesses a sufficiently strong foundation. That foundation will not be able to trigger a repricing without a catalyst powerful enough to attract liquidity, users, and new capital. So, what catalyst could break the current state of uncertainty, change how value is created within the ecosystem, and become a genuine turning point for Aave Coin? This is where we move into part 2. The real turning point is that Aave is moving from a decentralized lending application to a common credit infrastructure layer for the entire on-chain economy. At the heart of this transition is the Aave V4, but the value of the V4 is not just coming from new features. What's more important is that it changes the way Aave DeFi expands, attracts partners, and creates new revenue streams. In Aave V3, each market almost acts as a separate liquidity pool. A new market that wants to grow must attract depositors, borrowers, and liquidity from scratch. This makes it impossible for markets that use the same USDC, ETH, or similar assets to take advantage of each other's liquidity. With V4, the liquidity is fed into the liquidity hub, while the spokes take care of different use cases and risk configurations. Multiple spokes can access the same hub within the credit limit set by the administration. As a result, a new market no longer starts with an empty liquidity pool, but can connect to the liquidity depth Aave has built up before. Aave V4 deposits rose above $300 million as operating loans reached an all-time high of $100 million, while supply and borrowing limits were gradually raised according to actual use data. V4 then continues to be deployed on Avalanche, the first multi-chain expansion, with a core liquidity hub providing liquidity to 3 markets, including Main, AVAX Correlated, and Forex. This scale is still small compared to the V3 system, but it proves hub and spoke can operate outside the test environment and be replicated to multiple blockchains. The second piece of the catalyst is the Aave app, the gateway to bringing extra crypto liquidity into the protocol. According to the launch proposal published July 13, 2026, the app allows users to transfer funds from banks and access the yields generated by the Aave marketplace without having to create their own wallets, hold gas tokens, or perform complex DeFi operations. The iOS waiting list already has about 50,000 accounts completing multiple signups, while the Android version is expected to be released in the third quarter of 2026. Aave Labs estimates the app could generate more than $15 million in annual revenue by the end of the second year, with the entire net revenue going to the DAO treasury. This is a developer forecast, not a guaranteed result, but it provides a clear path for Aave to reach mainstream users and generate more cash flow. The third piece of the puzzle is Aave's ability to turn its massive liquidity pool into a more efficient machine. According to an analysis by Aave Labs in March 2026, of the roughly $20 billion of stable coins deposited into the protocol, about $6 billion is still idle and available for lending, nearly 30% equivalent. The V4 reinvestment module is designed to put a portion of this unused liquidity into controlled strategies, thereby increasing returns for senders and opening up more revenue streams for the DAO. If safely deployed, the same amount of capital can generate more economic activity that Aave does not necessarily have to rely entirely on new deposit flows. So the catalyst that could change things is not simply Aave V4 launched. It's the V4's ability to turn Aave into a credit network that blockchains, wallets, exchanges, institutions, and fintechs can connect directly to. And that brings us to the most important question. Is Aave Technical Analysis preparing for a real breakout in 2026? Or is this whole growth story just setting up one last trap? Let's find the answer at the end of the video. Based on the weekly chart, Aave is currently trading around $98. This is not a random price range. The $90 to $105 zone has repeatedly served as an important boundary in Aave history. It is the accumulation zone before the strong rally of 2021, the price zone of 2022 to 2024, and also the support zone that Aave is trying to defend after the downtrend from the peak of 2025. The first positive point is that the selling pressure is showing signs of slowing down. After falling from the zone above $300, Aave did not continue its straight line decline, but started to form a low around $65 to $75, then recovered to near $100. However, a bounce from the bottom was not enough to confirm a reversal. On the weekly frame, the main structure remains the lower highs, as Aave has not yet overcome any major resistance areas formed during the decline. The first zone to watch is $110 to $120. This is where the nearest selling comes in and is also the psychological level just above the current accumulation zone. If the Aave price prediction only rises to $115 or $120 and then quickly turns around, it may be just a technical pullback. A reliable breakout should have the weekly candle close clearly above $120, after which the price returns to test this zone but retains it as support. From $98.5, a move to $120 equates to an increase of about 22%, significant, but still not enough to confirm a new bullish cycle. In the base scenario, if the crypto market remains stable but the cash flow has not returned to DeFi strongly, Aave crypto could fluctuate in the $120 to $160 region for the rest of 2026. The $150 level is equivalent to an increase of about 52% from the current price. This is a reasonable goal if V4 continues to expand, Aave app begins to attract users, but has not yet made a significant change to the revenue or the need to buy tokens. V4 is now live and continues to add new hub and spoke, while the Aave app proposal shows that the product is getting closer to the commercialization stage. However, the market will need actual usage figures instead of just reacting to development plans. In a strong breakout scenario, Aave needs to break above $160 and turn this zone into support. Once there, the next target will be at $190 to $220. This is the area that has acted as support and resistance in both the last two cycles. The $200 level is equivalent to an increase of more than 100% from the present, but considering the historical volatility of Aave, this is not an unrealistic goal. The condition is that the market must see clear growth in deposits, loans, and revenue, and V4 must demonstrate that the new architecture can attract external markets and partners. But what are the signs of a final trap? The biggest risk is that Aave slightly overshoots $110 to $120, attracting buyers to follow the breakout and quickly closes the week back below $90. The current rally could then become a bullish trap. If the $80 to $85 zone breaks down, the price is likely to return to the $60 to $70 test. The $70 level is equivalent to a drop of almost 29% from the present. If this zone also fails, the final long-term support is around $45 to $50, equivalent to a drop of almost half and near the bottom area of the previous cycle. So, the conclusion for 2026 should not be based on a single figure. Below $120, Aave is still accumulating and has not yet confirmed the reversal. Above $160, the bullish structure begins to become reliable. Above $220, the target of $280 to $320 is opened. But if the price loses $80, the risk of a return to $60 or even $50 increases sharply. In your opinion, Aave is preparing for a big breakout, or is this just the last trap before a deeper fall? Leave your price target in the comments. If this video delivers value, hit likes, subscribe to the channel, and ring the bell so as not to miss the next analysis on Aave News Today. Altcoins to buy now. How does Aave work? And keep in mind that in crypto, the biggest opportunity often comes when the market is in doubt. But the biggest risk also comes when we believe we've seen the whole story. This is analytical and educational content, not investment advice. Do your own research and manage risk before making any decisions. Thank you for watching all the videos. Goodbye and see you in the next video.